Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Tuesday, May 17th. The earnings calendar is packed today with the world's largest retailer topping the list. We'll get to all the day's big stock movers in just a moment, but first we have some new economic data to tell you about. Construction on new U.S. homes fell 10.6% last month, while March housing starts were revised higher. Economists had been expecting the April number to rise, and building permits, viewed as a gauge of future housing demand, dropped 4%. Meanwhile, production by U.S. factories, mines, and utilities was flat last month, well below the 0.3% increase expected by economists. The shortfall was due in part to the Japanese earthquake and tsunami, which led to parts shortages, particularly in the auto industry. Adding to the sense of weakness, industrial output in February and March was also revised lower. Following the data, stocks on Wall Street are losing ground, and commodities prices are dropping further. Crude oil is now trading well below $97 a barrel.
On the earnings front, Walmart reported a 3% increase in profit, topping estimates. Overall revenue rose 4.4% as strong demand from China to Mexico helped offset an 8th straight quarter of decline in U.S. sales. Right now, shares of Walmart are losing 1%. Meanwhile, Home Depot is up about 1% after boosting its earnings forecast for the full fiscal year. The world's biggest home improvement retailer also reported a 12% increase in first quarter net income. But sales slipped a bit, missing estimates. Elsewhere in the retail sector, Saks beat analyst forecasts with its quarterly profit and sales, as the luxury segment of the industry continues to outperform. Shares of Saks are gaining more than 2%. But Dick's Sporting Goods is falling nearly 5%. The company posted strong first quarter results and raised its full year forecast, but its outlook for the current quarter missed estimates.
Another big stock decliner today is Hewlett-Packard, dropping more than 6% right now. The technology giant reported a small increase in fiscal second quarter profit and sales, coming in slightly above expectations. But HP lowered its earnings forecast for the current quarter and the full year. The results are out a day earlier than planned, after an internal memo from the company's chief executive was leaked to the press. It warned of another tough quarter ahead and reportedly told executives that the company's existing hiring plans are unaffordable. Hewlett-Packard has been under pressure since its last earnings report 3 months ago. Its forecast disappointed investors, and the company warned of weakness in its PC and service business. Since then, the stock has lost more than 17%.
A couple more stock movers to tell you about. NYSE Euronext is down another 1.5% today, after tumbling nearly 13% yesterday. Argus Research cut its rating on the stock from buy to hold after NASDAQ OMX Group and the Intercontinental Exchange withdrew their hostile bid for the company. Meanwhile, Intel is also losing 1.5% in early trading. FBR Capital predicted that its microchips will be replaced by ones from Qualcomm in Apple's new iPhone 5. That's the latest from Weiss Research. Have a great trading day.